Now, as we see oil prices drop a little bit, but broadly speaking, hold the recent gains. And of course, with that number of COVID cases in India holding up, the opening of the US pipeline giving us that extra sort of reason to look at the price of oil. With all this in mind and oil prices under pressure this morning, we're off now to Daily FX to join Justin McQueen, who joins us for a risk event for next week. But Justin, good morning to you. First of all, I have to say it's not really so much a risk event. It's more about monitoring a trend around what's happening in the oil markets. Explain what your trade is to watch out for next week.
Good morning, Jeremy, and thank you for having me. So again, in terms of with oil prices, we're starting to see a bit of a pullback, and we've started to see that in other commodity markets such as lumber and iron ore prices. They're both down around about 12% in the past couple of sessions, and now we're starting to see a bit of a rollover in terms of oil prices. Like yesterday, we did see oil prices come off slightly, about 2.5%. And if you look at it against the Canadian dollar, as you can see, the Canadian dollar against the US dollar has sort of outpaced those sort of gains that we have seen in the oil market. And also that is the same if you take a look in terms of relative yield spreads between the US and Canada. Dollar CAD has somewhat sort of outpaced the move seen in the bond market as well. So suggesting that some of the move might be a bit more speculative in terms of this outperformance that we've been seeing in the Canadian dollar, which has been pretty broad-based across the board. Now, if we take a closer look in terms of dollar CAD, yesterday it did seem like we were starting to try and put in a little bit of a short-term bottom, which has been pretty rare in terms of how we've been moving over the past 2 to 3 weeks, which after that BOC hawkish pivot, we've seen the Canadian dollar gain about 4.8% against the US dollar, which is quite a sizable move in such a short period of time. But yesterday was a sort of a notable sort of counter trend rally. We did break above this short-term trend line, slightly stopped at the 122 handle, but if we see a bit of a weekly close above this 23.6% Fibonacci retracement, then I think personally that we could start to see a bit more conviction in this sort of counter trend rally, and we potentially could move up to around about the 123 handle, which is where the 20 DMA resides. But if you take a look in terms of the longer term for dollar CAD, yes, we've seen this continued downside, but going below 120 has been a rare occurrence, and on the RSI, we are pretty much hovering at those oversold conditions, which does, to me, suggest that the risk to reward for adding new shorts is somewhat unappealing. If you were to go towards a bearish outlook for dollar CAD, then it would be better to do that on the back of a bit of a rally or a counter trend rally in the pair. But it's not just dollar CAD; it's also CAD yen as well, which is pretty much the most overbought since roughly around about sort of 2013, and we've seen a massive move in the Canadian dollar against Japanese yen. So perhaps we might see a bit of exhaustion. We did falter yesterday at about 90.50. The key level really, which would suggest to me that perhaps looking for a pullback would be negated, is if we were to close above 91.55. But for now, I think that we could see a bit of a pullback, a bit of an exhaustion in terms of the move in the Canadian dollar. And keep in mind that with oil prices starting to slightly roll over, that might give a sort of a good guide that we could start to see a bit of a pullback in the Canadian dollar.
Lovely. Okay, Justin, thanks so much indeed for joining us there with a look at a risk event or a trend to watch out for next week, for the week starting Monday, the 17th of May. For more videos from us here at IGTV, join us on Twitter at IGCom and subscribe to our YouTube channel.